Welcome back. You're tuned right here on Market Cafe, and here's an ET Now news break that has been confirmed. Okay, no, before we go to that, Lupin is something as promised before the break that we'll talk about, and it is bound to hog the limelight today as well after yesterday's USFDA warning letter for not one but two of its units, and that triggered a 17% slump on the stock price. Management, however, tried to calm frayed nerves, says that the initial read does not flag any data integrity issues and all concerns will be addressed expeditiously. Listen in.
We wanted to share with you give you a little bit of color on the warning letter that we received early this morning. We're obviously extremely disappointed to get it. As you know, we've been talking about this multiple times over the last couple of quarters. But early this morning, we received this joint warning letter for both our Goa and Indore Unit 2 plants. Just in terms of background, the Goa plant was inspected in April this year, and we had 3 observations coming out of that. The Indore plant was inspected in May this year, and we had 6 observations. In our read of the warning letter, there's nothing in the direction of data integrity or the like. Basically, there are 2 main areas where the FDA is not satisfied with our responses. The first is around out of specification results and our handling of those. And the second is around hold time studies and how we conduct them. Obviously, we addressed these in our responses. We used outside consultants at that time as well. But I think, unfortunately, we didn't see it in the direction of what the FDA is taking it. And I think basically the FDA is okay with our approach on going prospectively on what we've said for both future handling of out-of-spec results as well as how we handle hold time studies going forward.
Meantime, let's also check out what the brokerages are saying this morning about Lupin. CLSA says that the favorable risk-reward is something that will continue, and their EV sales methodology is also something that will aid the growth, but they expect the company to maintain the US sales of $200 million per quarter, and they also expect the company to maintain the EBITDA margin of 20%. However, they've cut the FY 19-20 EPS by 15 to 20%, still maintaining a buy stance. Target revised to 1,030 versus 1,260, which was their earlier target price for this particular stock. Meantime, Nomura says that specific requirements mentioned in the warning letter, the USFDA issues which they have can be addressed within 6 months. The data integrity issues are unlikely in the near future. So they also maintain a buy and target remains unchanged at 1,181 rupees.
And meantime, more from the pharma space. Cipla slumped in trade despite an inline set of Q2